Welcome back to Fair Fate Investing. Today's video is an update on Celsius Holdings, and since our last video on Celsius, this company has dropped 30 to 40%. It's good to look back and assess where I've been right about a stock being overpriced, but the question is it now at a buying position? Today we're going to look at some of the fundamentals, the valuation, and also discuss what I think Celsius could be worth. If you enjoy these type of videos, hit the like button, subscribe. So we can see here that it's about 40% below its high. I called it out and posted a video right around here, so 3 months back roughly. And back then it was somewhere around 100 price to earnings ratio. Now we're sitting at 63. The market cap is 13.4 billion. They still have a tremendous amount of cash on hand relative to their debts. So $444 for every dollar they have of debt. The margins still look phenomenal, both versus the industry and their historical performance. Management looks fairly strong as well with ROE, ROA, ROIC, and ROC. Their price to earnings versus historical in the last 10 years, they have a minimum of 19.9 and a median of 318. So we're sitting at a fairly low price to earnings relative to their historical, but still 63 shows a lot of growth priced into the business. We can see revenues are up and to the right, fairly exponential, and most recently they actually started netting money, and that cash pile is booming as they net that money. So just about $750 million in cash and $2 million in debt. Zooming in on a trailing 12-month basis, we can see that revenue steadily up and to the right and solid earnings, and it does look like they're selling extra shares every quarter, so diluting that value for shareholders by increasing the float. Not something I want to see. We can see they've had serious amounts of growth in the last 3 years, earnings per share as well as for free cash flow. And currently there's about 30 to 31% growth priced in for earnings per share over the next 10 years. That means this company is priced to grow at 31% annually for the next 10 years, which is a substantial amount of growth and something that I don't necessarily want to see, because for it to be a fair value even higher than that, we need to see much higher to get to doubles or triples. And ultimately, I'm looking for the 10x's. I'm not looking for the doubles. If a stock has the opportunity to 10x, then it's much more likely to double. So I want to increase my odds of finding doubles or triples by looking only for 10x's. And if I find a 5x, maybe I'll buy that. But this is something that still, to me, looks relatively overvalued. And it's a pretty similar story for free cash flow, with 27% annual priced in for the next 10 years. One of Celsius's very close competitors, and I would say something that they could aspire to become in the future, is Monster Energy. And you can see here that Monster Energy has a market cap of just about $50 billion. So with Celsius sitting at that almost $13.5 billion, that means that there is roughly a 3x potential for them to become like Monster. But then again, Monster Energy has a cult following. It's been around for years. They have no debts, even higher margins, although they have historically performed better than they are now. It shows that Celsius could be growing in the future, but as of right now, the valuation is a little bit tricky. And to me, becoming Monster Energy would be sort of the best case scenario for Celsius. In the energy drink industry, Monster is sort of the top dog. So that means $13.5 billion market cap has sort of a limit, I would call it, of $50 billion. So there's a very low margin of safety here, negative margin of safety here for Celsius. And even though it's already fallen 40%, it could bounce around. You could make some money if you were to be buying at this position, but it's definitely not something that I'm looking to buy. Even if I make 50% just trading the volatility, it's just not something that I'm looking for, because like I said, I'm looking for those 10x's. That'll give me a greater likelihood of getting a double or a triple and maintaining some safety. But that being said, this is my assessment of Celsius 3 months after my other video, where I called out a overvaluation then, and it proceeded to fall 40%. It could continue to trade for a premium, and I would argue that it still does trade for a pretty significant premium. It could bounce up, it could bounce down. That's just short-term volatility, but over the long run, things end up tending to slope towards what they earn and a fairer value. So I personally am staying far away from Celsius because I have found many better opportunities elsewhere. If you have a different take on this, leave a comment down below and let me know what your thoughts are. Whether you think it can dethrone Monster Energy and become even bigger than that, But like I said, I don't think this is going to be a 10x opportunity, so I'm staying away.